What if I told you that the most important financial revolution of our lifetime was not engineered by a team of Ivy League economists in a boardroom, or drafted by politicians sitting behind closed doors in Washington, but was quietly launched by an anonymous programmer on the internet? Welcome to Money's Hidden Past, Rich People Lied. We fact-checked today. We're looking at the digital asset that broke the traditional rules and exploring exactly why you cannot print more Bitcoin for years. The traditional financial establishment completely dismissed it. They sat on national television and laughed at the concept of digital money, calling it a speculative bubble designed for computer nerds and criminals, and predicting that it would inevitably crash to zero and be forgotten. But as we stand here, looking at the financial landscape of 2026, the script has been violently and permanently flipped on the banking elite. The exact same Wall Street giants who publicly mocked the network are now quietly and aggressively hoarding as much of it as they can. To understand why the smartest money in the world changed their minds, we have to step back and look at the fundamental problem with our current system. The paper money that you carry in your pocket and store in your bank account is controlled entirely by a central authority with unlimited printing power. Whenever the global economy slows down or a major banking crisis hits, the government steps in and authorizes the creation of trillions of new dollars. They call it quantitative easing or economic stimulus to make it sound professional. But the reality is, they are simply creating new currency out of thin air. This constant expansion of the money supply has a devastating hidden cost. It actively dilutes the value of every single dollar you have already saved, creating an invisible tax on your labor that economists call inflation, which slowly but surely makes your daily cost of living completely unaffordable. The money you saved 10 years ago buys half as much as it used to. Not because the goods and services became fundamentally harder to produce, but because the currency you are using to buy them is losing its value. The working class is forced to run on a treadmill just to survive. In 2008, the traditional banking system almost completely collapsed due to decades of reckless lending and unchecked corporate greed. And right in the middle of that historic global financial meltdown, a mysterious figure named Satoshi Nakamoto published a 9-page white paper that document outlined a new system for electronic cash that did not rely on banks. It proposed a decentralized network maintained by thousands of independent computers, where transactions could be verified without needing a trusted third party. And most importantly, it introduced the concept of absolute digital scarcity. Satoshi hard-coded a strict mathematical limit into the software of the network, dictating that there will only ever be 21 million bitcoins in existence. It is a hard cap that is enforced by the consensus of the entire network, making it the first truly scarce digital asset in the history of humanity. Unlike the United States dollar or the euro, which can be printed endlessly, the supply of Bitcoin is fixed and immune to political manipulation. No president can sign an executive order to magically create more coins, and no central bank can artificially inflate the supply to fund a war. This concept of unalterable scarcity is what gives the asset its power throughout history. Humans have always used scarce items as a store of value, from seashells to glass beads to massive heavy bars of physical gold, because scarcity is the only thing that protects your purchasing power over time. But physical gold has inherent limitations in a modern digital economy. It is incredibly heavy and expensive to safely store in a secure vault. It is difficult to verify without specialized chemical testing equipment, and it is practically impossible to physically send across the world in seconds. Bitcoin solved all of the historical logistical problems of physical gold. It is entirely digital, meaning it costs nothing to securely store and protect. It is instantly verifiable by anyone running a node on the global network, and you can send $1 billion to Japan on a Sunday night for pennies. For the first decade of its existence, the network was mostly a grassroots movement built by cryptographers and supported by early adopters who understood the math. But the asset was highly volatile and largely ignored by institutional money, until the financial realities of the modern world became impossible to ignore as inflation began to ravage the global economy. In the 2020s, corporate executives started looking for ways to protect their massive treasuries, and they slowly realized that sitting on billions of depreciating paper dollars was a guaranteed mathematical formula for losing their purchasing power. Companies like MicroStrategy were the first to make the controversial leap, converting their corporate cash reserves directly into Bitcoin, facing immense criticism from traditional analysts who called them reckless, until the strategy proved to be an absolute masterclass in wealth preservation. Then the floodgates opened with the approval of spot exchange, traded funds allowing the largest and most conservative financial institutions in the world to offer direct exposure to Bitcoin to their traditional retail clients without requiring them to understand cryptography or manage digital wallets. Titans of Wall Street like BlackRock and Fidelity entered the arena, meaning the asset was no longer just a fringe experiment for online libertarians. It had officially been integrated into the foundation of global finance. and the demand for the limited supply of coins began to skyrocket. We are now witnessing a transition that has never happened before. Even sovereign governments are beginning to treat it as a strategic reserve asset, realizing that holding a decentralized currency is a matter of national security, and that being the last country to adopt the standard is a dangerous position. The United States government has openly discussed strategic Bitcoin initiatives, treating the digital network with the same reverence historically given to gold, because they understand that in a world of infinite currency, printing, the entity that holds the most scarce asset inevitably holds the most power. This shift from a speculative gamble to a recognized global reserve asset is why Bitcoin has consistently been the best performing investment of the decade. It has drastically outperformed the S&P 500 and traditional real estate because it is repricing the entire world against an asset that cannot be inflated. Financial advisors use to tell their clients to avoid it entirely. But the modern math shows that even a tiny 1 to 5% portfolio allocation historically improves the overall risk-adjusted returns of a traditional retirement account, acting as explosive financial rocket fuel that moves independently of stocks and bonds. But the value of this network goes far beyond simple investment returns. It represents the ultimate form of personal financial sovereignty because it is the only global payment system that does not require permission, meaning nobody can tell you how or when you're allowed to spend your own money if you keep your life savings in a traditional commercial retail bank. You do not actually own that money. You're simply an unsecured creditor. The bank can arbitrarily decide to freeze your account without warning or block a transaction because it violates their internal corporate policies. With Bitcoin, you have the ability to hold your own private cryptographic keys, meaning you have absolute unyielding control over your digital property. Nobody can confiscate it without your specific mathematical consent, and nobody can stop you from participating in the global digital economy. You can memorize a sequence of 12 simple words in your head and walk across a hostile international border with $1 billion in wealth completely undetected and immune to physical seizure or governmental theft, a level of geographic portability that is impossible with real estate or cash. This empowers dissidents living under oppressive political regimes, allowing them to protect their labor from hyperinflation, and corrupt leaders, giving the poorest and most marginalized people on the entire planet access to a secure savings technology that was previously reserved for the elite. However, the journey to financial sovereignty is not without its challenges. The global market for this asset operates 24 hours a day, and the price is still subject to massive and often terrifying volatility, meaning it is not an investment for those looking to make a quick profit. The price will experience dramatic drawdowns that will test your conviction, and the media will eagerly declare the asset dead every time it crashes, which is why the smartest investors do not try to perfectly time the market or gamble their entire life savings on a sudden massive price spike. They use a disciplined strategy known as dollar cost averaging, buying a small and fixed amount of the asset every single week or month, regardless of whether the market price is currently going up or down, smoothing out the volatility, and slowly accumulating a position over time by removing the dangerous human emotion from the investment process. You allow the fundamental mathematics of the network to work in your favor, trusting the unalterable code rather than your own unreliable intuition and participating in the greatest transfer of wealth in human history. The legacy financial system is built on a foundation of infinite debt, requiring the constant devaluation of your labor just to keep the machine running. It is a game that is mathematically rigged against the working class and designed to concentrate wealth in the hands of the people closest to the printer. Bitcoin is a peaceful exit from that broken and corrupt financial architecture. It is a silent revolution built on cryptography and decentralized consensus, offering a lifeboat to anyone willing to take the time to understand the math and secure their own economic future in an increasingly uncertain world. The Wall Street giants are not accumulating it because they want to help you. They are hoarding it because they recognize the inevitable reality of the future. They know that the era of trusting politicians to manage the money supply is ending, and that the future belongs to systems that are transparent, verifiable, and scarce. So, the next time someone tells you that digital currency is just a passing fad, or that you should trust the traditional banks to protect your purchasing power, remember that the smartest money in the room is quietly doing the exact opposite, securing their place on a network where the rules apply equally to everyone. If this deep dive into the true power of digital scarcity and financial sovereignty and the history of why Wall Street is hoarding Bitcoin opened your eyes about how modern wealth is really preserved in the 21st century, then do me a favor right now. Smash that like button to let the algorithm know this conversation matters. Share this video with every friend and family member who wants to understand the future of money and protect their savings. Let us keep exposing what the traditional financial system tries to hide, I will catch you in the next one, where we break down the next hidden chapter in the history of money and absolute power. Until then, stay informed, stay skeptical, and remember that the most valuable thing you can hold in a world of infinite printing is an asset where the math guarantees they can never print more.